Hi guys, welcome to 876 Invest. I'm here with a special for you guys. I'm going to be doing a breakdown of the one-on-one prospectus, and I'll be flying solo tonight. My name is Enel Vidal, and I'll just be going through a few of the important points in this prospectus that I've seen so far. So, first, let's begin with the amount of shares on offer. So in the highlighted area, you can see here we have 380 shares being offered at a price of $1 and a conversion price of 80 cents. As you'll see later on, this conversion price here is for convertible loans that were that one-on-one had with two companies. So we'll see that further down, and there will be 121,250,000 shares will be made available to the public at the subscription prices. And this is also an important point to note that when you're making your application, that the JCSD will charge $172.50, inclusive of GCT, in respect to each application. Right, so make sure you include that fee when you're doing your applications. And here's a breakdown of what you can expect when you're looking at the offers and what pools each person falls into. Right? So the general pool, as I said before, is 120,250,000 shares. And then you also have the employee share pool, which is going to be 30 million. Teacher share pool is going to be 30 million as well. Surgical reserve share pool, that's going to be 30 million. Key strategic partners, that's going to be 60 million. And then the convertible loan shares that I was talking about earlier, which is going to be 87 million shares. And let me just scroll on to the next point that I had highlighted. Yeah, so for example, these are some key points to pay attention to, such as the closing date, which is going to be August 19th, and then the opening date is going to be August 12th, right? But you guys know that with these IPOs like these, here it is, August 12th. With IPOs like these that are not very large, they tend to close very early on, usually on the first day. So I wouldn't be surprised to see this one closing on the first day or even in the first couple minutes, as we've seen before. Even though there have been adjustments made to the rules by the FSC, I don't know if those rules have been enacted as yet and they're in force. But if they aren't, it is possible that the IPO could close early. But let us wait and see. In regards to the convertible shares from before, these are the lenders that those shares will belong to. So lenders means Punjab Investments Limited, being the lender under the loan agreement dated September 25th, 2020, in the amount of 58 million, inclusive of interest, and Surgical Life Jamaica as the as managing agent for surgical blah blah blah, all of that for 29 million. So those are the two companies that had offered them loans, and in the structure that they had set it up, they'll be offered those. They would be repaid in essence through the shares, and they would get those shares at a price of 80 cents. So in essence, they would realize an immediate gain on those shares because they would get the shares at 80 cents, and when the company goes to market, the company will start trading at a minimum of $1, right? And that would have been structured in their deal or in their agreement in terms of the loan and how they would have been compensated. So I'm sure that if the company went to IPO, there would have been a section in it that said they would be compensated in a way such as this. And if not, if the company didn't go to IPO, then there would have been some other arrangement of how these companies would be compensated. And here's another important point. So the minimum subscription is 1,000 shares and increments of 100 thereafter. So if you're looking to purchase shares, you have to purchase a minimum of 1,000 shares. And here's a small table of the key dates that you should look out for. And the one being most important to most people, it would be this one. So you have to make sure you apply before then. And this prospectus or this IPO is done where Sagicor is the lead broker, and their platform, Sagicor Invest, will be the primary platform through which applications will be done. Now, this is at the date when this prospectus came out, that it was only thought that Sagicor Invest would be the only platform where it would be offered. But since then, um, the other companies have come on board. Whether that was always intended or was that a call after the prospectus was released, I'm not quite sure. But I know as of today that I'm recording this, that the, it's also on JMMB's platform as well as on Go IPO. So they've opened it up, so now more people have access to apply to it. And they have a cool feature called Una, where you can WhatsApp and ask questions about the IPO through their system. So that's new to all IPOs that have been done, and I think going forward it may be useful in other IPOs as well. All right. So as you see here, this is standard with IPOs as well, where it usually closes within 10 days of opening. Right. Again, as I said, especially with this being a junior market company, it's not expected that it will be open for this long. I don't see it being open longer than a day. And in recent memory, the one that was open the longest this year, 2022, was JFP, and JFP was open for 2 days, I believe. So I don't see it going past that 2 days. So another important point here: use of proceeds. Now, you'd think that when these companies come to market, there'd be a special use for these funds, and of course there is. So here you can see we estimate that we will receive proceeds of approximately 358 million, right? And then they plan to use the proceeds for investing in next generation learning content for new and existing markets. And we'll go into a little bit more of what those markets are a little further down. Investing in our adaptive learning technology using machine language and artificial intelligence ideas to personalize learning and to increase its working capital reserves. All right. So this here, the last one is a simple operations target where companies just need money to operate on a daily basis. So that one's understandable. And then the second one though is a little bit more specific to this company and the research and work that they'd have to do. And here are some key contact information regarding the prospectus. And this is some history about the company. You guys can read this later on, but just to point out some key points here. Well, about 2017 was when they decided to exit the business to consumer sector, and about 2021 they decided to re-enter that sector. So we'll take a look at that further down as well. But here, let us look at um, some specific information about the company. So One on One has experienced rapid growth and transformation from being just a tutoring company in Kingston to a full-fledged educational technology company, serving over 250,000 learners across the Caribbean over the past 3 years. So this is a massive number. So One on One has experienced rapid growth and transformation from being just a tutoring company in Kingston to a full-fledged educational technology company, serving over 250,000 learners across the Caribbean over the past 2 years. So, I mean, as you can see, this is a massive number. And I'm excited to see this number because it shows the direction that the Caribbean is looking at and the take up of technology that's there. Because it say 5 years ago, you wouldn't see anywhere near this number. So these are things that are very encouraging in the current environment. And this is a company that's using proprietary software, their own software that they developed in house, um, and use to help educate students and businesses and governments and so on. And then here's another point. Perhaps the most significant evolution has been in our offline learning solution, Classroom in a Box and Exam in a Box. This innovation allows students in lower, no internet environments to access their favorite internet based learning resources and content offline. And I mean, this is also very significant, seeing that we just came out of COVID, where a lot there, as you could say, there was a lot of problems for not just in Jamaica, across the Caribbean and the world, for people that had no connection to internet, and that caused a severe impact on the education system, as was recently shown in Jamaica as well. And the Ministry of Education put out studies that a significant amount of the children were behind due to COVID and the learning method and conditions, as well as lack of internet connection and devices. So I think something like this could be really useful. It still doesn't solve our problem of there being a lack of devices in a lot of instances, but it does solve the problem of there being no internet connectivity. So that this was a this as it says here is a very was a very key product for them and how it was rolled out. And here it is, that point I was mentioning earlier above, where it says in 2021, the company decided to re-enter the individual learning market. And this was seen that the company had built out a significant structure or foundation in their separate business lines, which included business to business as well as business to governments. Um, and I think once they had stabilized those two business lines, they had decided to go back into the individual business line. And I think it seems like a good business strategy, meaning the income that you'd earn from businesses and governments would be more stable than those earned from other consumers. See, being individuals, that they'd be more prone to what they call economic conditions. So you could see where if something happened like the pandemic, the income that you'd earn from a business line such as individuals would fluctuate a lot, as it affects persons' income earning ability. So I think that's my take on it, or what I've seen, and it would make sense if that's what has happened. Our team compromises of 70 high energy professionals. Well, 70 professionals is a relatively large company. Well, small company, but in the case of what this is, which is a fully virtual company, that's a pretty developed company. In terms of the amount of people and when they started and how far they've gotten and where they are at this point. And then product offerings. So these are some of the different product offerings offered by One on One. So you have One on One for teachers and students, or 1X, One on One for trainers and professionals. Um, and here it says that it's an easy to use personalized learning platform, and will be launched in September 2022. So this one hasn't been launched yet. One on One for trainers and professionals. And also 1X, which is one on one for teachers and students, hasn't been launched yet either. They are also expected to launch in the third quarter of 2022. So these two, one on one for trainers and professionals and one on one for teachers and students, are expected to launch in and around the same region. And they also have one-on-one for teams, which includes one-on-one learning platform for business, one-on-one learning content development, one-on-one content licensing, and in brackets they have off the shelf, which is I guess the trade name or what they represent it as to customers. And here it says we offer over 20,000 localized courses in 14 languages. So this is a bold step here. They're taking a wider, more international view of it. And in this way, they're opening themselves up to potentially a lot more customers and clients. And they have one-on-one for enterprise, business to business division here, which is also called the private label online learning platform. They have one-on-one for governments, which is also another business to business division. They also have educational management information system and classroom in a box, offline content cloud, which I shared a little bit on earlier of my thoughts on it, and I think it's a great idea and it potentially serves a lot more purpose going forward. So Total Services Jamaica Limited currently provides education technology services to the company, which facilitates the company's facilitates the company's use of LMS employed by the company in its operations. And as such, acquiring Total Services Limited will allow for more efficient and effective use of implementation of LMS. And LMS here, I believe, stands for Learning Management Software. Yes, Learning Management Software. So this is an efficiency play here where a third party provided services to them and they're acquiring that third party. So that will be good for their margins and um, the synergies and consolidations going forward. But yeah, this was a good move by the company. If the proceeds of the IPO be used for this, it didn't state exactly, but I'm pretty sure that the proceeds from the IPO does have something to do with this. And as you can see, this is also expected to end in and around the third quarter, which is the same time period they're expected to bring in their new product lines, which is um 1X and what was the other one? Let me look at it. Yes, 1X and one-on-one for teachers and for trainers and professionals. So here is a breakdown of the share capital of the company as of right before the IPO. So this is the pre-split shareholdings and post-split shareholdings, and you can see that the shares were subdivided in a proportion of 26.5. So every share count you see here was multiplied by 26.5 to give these numbers here, right? And this was the total. And as you can see here, there's the authorized capital of the company is 100 billion. So authorized capital of the company meaning the amount of shares that the company is allowed to have at max issued at any point in time. So that's what that is. So they're well below that. And then if you come down further here, they give you some information about the preference shareholders and how their conversions were done. And yes. Oh, and these are also some convertible loan shares that were done as well for different individuals, and one individual that remains the same, and it shows you how much shares they would end up with after this transaction was completed. And then here shows the shareholdings directly before the IPO, and you can go through and look at their shareholdings. But this is what they were before the IPO, And then after the IPO, this is what they will be. And here we have highlighted the non-reserve share pool and how much of the total shareholdings that would represent. And also, another important point to note is intellectual property. So, one and one is very similar to um, Edifocal. They're not exactly the same, but they're similar. And I'd say one on one is a little bit more further down the road than Edifocal is in terms of maturity and growth. And also, like Edifocal, they have no physical assets or property, and a lot of their property is intangible, um, a lot of which is in the form of intellectual property. And here we have a list of some of the one-on-one intellectual property that they have registered. And as you see here, all trademarks are registered at the Jamaica Intellectual Property Office in classes Vienna and 512 Nice on May 8, 2015, and are valid until January 28, 2024. So that gives some idea of the timelines that these trademarks will be in use for and that they are protected for as well. And here is a breakdown of all insurance arrangements the company has. And as I said earlier, real property. As at the date of this prospectus, the company owns no real property. So that's what I was saying, that they are quite similar to Edifocal in terms of they don't have any real property or assets, but they still do have assets, um, as they are, even though they're intangible. And this is a breakdown of the company's management. And this is a breakdown of the company's board. As you can see here, the board is filled with very decorated and experienced persons, such as Mr. Michael Bernard. You have Mr. Ricardo Allen, the CEO himself, Mr. John Bailey, who is involved in a number of business activities, such as being in the management of Virginia Dare. You have Mrs. Karen Vaz, you have Mrs. Mishka McLeod Hines, Mr. Tyron Wilson, who is also the CEO of a listed company, iCreate Limited, Dr. Kyle Granston, and the mentor is Mr. Douglas Arain, who was well known as the CEO and chairman of Grace Kennedy for many, many years. So the company has a strong board and mentor behind it, and that bodes well for them going forward in terms of they'd have a bank of experience to rely on, and that experience will be able to steer them in the right direction going forward. This was another important point where it says in 2016 the repeal of the Jamaica Export Free Zones Act and its replacement with the Jamaica Special Economic Zone Authority, as well as the creation of global services sector, which one is a part of, allowed there to be Jamaica utilizing technology to train and prepare its workforce to compete globally. So this is where, due to Jamaica's change in policy and also direction, it helped one on one to be a main partner of the government in terms of training employees um, to have certain skill sets that they could be useful and be gainfully employed in the working environment. And this was a direct interaction that you could see between government that government has and then the impact it would have on companies as well as individuals in the country. So here we have the one-on-one for teachers, students and teachers are the 1X product, and we have one-on-one for professionals and trainers. And as you can see here, they both fall under the business to consumer segment, and they're expected to Projected earnings is expected to be around 660,000 for the 1X product and 300,000 for the one-on-one professional and trainers product. 1X is expected to launch around September 1st, as was shown earlier, and the one-on-one for teachers and for professionals and trainers is expected to launch around March 1st, 2023. So the business model for a company such as one-on-one is based on a few different factors. So here it describes where one-on-one for team and LMS has a earning model based on licensing. So the company licenses its software and off-the-shelf content for an annual fee, which is charged per employee using the system. And then you have a little difference here where one-on-one for content and development is this the earning model for them is the fee is based on the level of customization. So that customization may include some of this licensing earning model here, as well as another or a combination of other methods. But you can see how this method is slightly different from a lot of what we see nowadays, where you go into a store, you just purchase something, and you walk home. Where online businesses have a method of either using subscriptions or licenses in order to earn their income. So for one-on-one for students and teachers, they have an important point where remember when I said that in 2017 they had pivoted from the business to consumer segment to business segment. So here it says it is important to note that this is a business segment that represented approximately 46% of revenues in 2017 before we pivoted to an enterprise business model, or as I was saying before, a business to business segment. And then they also have one-on-one for professionals and teach and trainers, where one-on-one's aim is to launch the beta version of this product from March 2023, with the full version scheduled to be rolled out for September 2023. So for the product one-on-one white label private label solutions, it says one-on-one's private labeling business has been a staple since we transitioned to an enterprise business model in 2017. This allowed the provision of learning system for large clients with unique customization deployment requirements. Currently, one-on-one has earned 250,000 US in annual recurring revenues from this product solution, and it's expected to grow 50% by August 2023. The average term for the agreements is 3.5 years, and it is important to note that other education companies in the industry use their platform. So again, this is important because it shows that not only are they acting as an educational company, but they're also acting as infrastructure to other educational companies. So that allows for their reach to be much wider, and the amount of streams that they collect revenue is also deeper, because not only are they using their own platforms, but they're the background of other educational companies' platforms as well. So they're still earning a percentage of those other educational companies' revenues. So I think that that represents an almost a certain level of ubiquity or widespread nature of how one-on-one business is structured. It says to date, while Open EMIS, or Education Management Information System, has been adopted in 9 Caribbean countries at a government level, 101 has completed one of the largest implementations to date for the government of Bahamas that is still ongoing. As you can see, Bahamas is one of 101's largest partners to date, and it is currently estimated that over 31 countries globally are using or piloting Open EMIS with over 3.5 million students per user. 3.5 million students or users. The outlook on the classroom in a box project is strong. One that has existing grant valuing 14 million through the DVJ to execute its go-to-market strategy for the device. The company has recently secured a distribution deal with a local telecom provider to provision and install the devices in schools and other places of use. One-on-one projects One-on-one projects to earn 150,000 US annually from the deployment of 450 units, with this scaling to over 1,500 units within the next 5 years. Again, this scaling here is projecting of solid growth, and this is just one segment of their business. As you can see, there's a lot of other segments of their business that are projected to do very well and grow strongly. So for their revenue, they expect to earn revenue from subscription costs for their services at one-on-one, both on the retail and enterprise side of business, and are also paid by governments for special projects across the region. Most of the revenues will be generated from their business to business consumer products, B2C, where they will collect commission on revenue generated by their trainers and teachers who use the platform to deliver training. So again, this is a business model that is very scalable, as it's completely digital, one. So therefore it's not just across the Caribbean, but could be a very global business. And those revenues will be collected also online, which again helps well for their scaling and their global reach, or their aim, as they have pointed out. And for costs, fees paid to service providers to develop content for our clients, direct project implementation costs, and expenses associated with the general operation of our platform in the form of hosting and licensing fees. Going forward, the cost of revenue will also include fees paid to a trainer or teacher to conduct live classes or training sessions. And this is also a good business move, seeing that you're lowering the cost to cover, including the cost of operating the business, in what you will charge the customers, and that will be upfront. So there's no reconciliation that has to be done afterwards. So that's also a good move for the company. An important point to note here is that an increase in inventory is represented by content licenses purchased for resale from an overseas supplier. The increase in receivables is mainly represented by amounts due from governments, including the government of Jamaica, government of St. Kitts and Nevis, and the government of the Commonwealth of Bahamas. So this shows the reach that one-on-one has had thus far. So here, the company outlines why they've decided to enter back into the business to consumer market. It says the range of the one-on-one into the B2C market will see the company increasing its presence in the sub-industry through customer acquisition and customer retention. This product will allow the company to reduce its customer concentration risk, as due to the large number of customers, no one customer has a significant impact on revenue. And here, what this is saying to me is that they've obviously recognized the risk that their current model has, in terms of if one of the governments or institution pulls out, that significantly puts a dent in their business operations. And they have sought to mitigate that by going back, um, to the business to consumer segment, even though it may be a costly venture to enter into or to re enter into. They still see it as something that they should do to continue to operate in the best interest of the company going forward. And here they speak of their expansions, the markets they would like to expand to, and they would like to reach more into the Caribbean and Latin American markets. And it says retention of current contracts. Based on historical data, the company projects to retain 160 million in current contracts and recurrent users. This represents approximately 30%, 37% of the financial year 2023 revenue projections. And this would be a significant portion. And this is just retention. Of course, they'd have a significant amount of projects that they're currently negotiating and new contracts that they're trying to seek as well. And the company also going forward, it's in under the segment called rapid customer acquisition across existing business lines. The company intends to invest $40 million into marketing to drive new customer acquisition and expand an expanded pipeline. Point three here, and this is under one-on-one growth and future. So what they're expecting for their growth and future from here on. So the launch of one-on-one students business line, the company expects to earn 102 million from this line of business through 5,000 students. We expect the net margin on this line of business to initially start at 20%, which will grow to 30% within the first 2 years. Here, where you see that the margin expected to be 20% is showing that because it's a new venture, they're expected to have proportionally lower profits and or higher expenses due to this business line being new, and they will have to figure out a lot of things and spend more in the early stages to set it up properly. Therefore, the margins will be lower initially. So, foreign exchange rate. The company has a net asset exposure to currency value fluctuations as a larger percentage of the revenue is gained in US dollars than our expenses. So, this would also be a good buffer for them if there is foreign exchange volatility going forward, seeing that they earn most of their revenues in US dollars, then that would give them a good buffer. So here, this shows a list of some of the contracts or the major contracts that one-on-one currently still has, and it shows you the type of contract, effective date, original tenure, and expiry. And as you can see here, these are very large-scale clients, including the Ministry of Education Jamaica, um, Caribbean Examination Council, Cayman Wireless, and the list goes on, as you can see. And these are very large clients where you expect for incomes to be stable and fairly certain. But again, as they had this said earlier, when having large clients like this, there's a large risk of if one or more of the clients decides to no longer have you as a partner, then that would significantly impact your books and your business. So I think that was very prescient of them um, to decide to take that move. And here it shows the debt arrangements that the company has and the type of debt, the tenure when it was acquired and when it will expire, and also the agreements they have relating to properties. So here they have agreements with Surgical Properties and Regis for a co-working space. So overall, so I think that this prospectus from one-on-one is a fairly good prospectus, and it gives us a wide range and understanding of the company and what they are and what they do. And I also think at the price of $1, it's relatively fairly valued at around 20 times or in and around the average of the market. And I think that compared to other offers that have gone so far this year, this one is right up there with them, with the best of those offers, and it should be a good offer to participate in. So that's it from us, guys, here at 876 Invest. Thank you for tuning in, and I hope you tune into the next one. All right.